Welcome to another video. This is Friday the 21st of April 2017's review. Win today on the YM, and that concludes the week. I got in here at 541, and the reason being because, again, using time and sales over here and the footprint, projecting that onto the chart and making sense of it. Which, by the way, there's a massive collection of sells here. We had one trader put off 131 lot trade at 20, and then at the same time, if you look here, these are the types of clues you can look for. All these sell orders, this person sold on hit the bid, so they were looking to sell and they moved to the bid and hit the bid, and it just so happens that this is all at 4:01 and 26 seconds, and all at 20, which would lead me to believe that it's an even bigger institutional selling, because it occurred at the same time. And yes, there's 131 here and then smaller orders, but they're all significant sized orders, so it looks like they've split them up. So really it's one bigger player, market player, selling whatever the sum total is of all 1, 2, 3, 4, 5, 6, 7 trades here. So what's that? That's 60, 71, 79, 89, 89, 92, 112, 137, 268, all sold at 20 right here on this candle. So, and the candle finished with a wick, so that's a very good sign for downside. I got out at 18 when my target was actually at 83, but I didn't, as per my rules, I don't hold through the news. I do sometimes, but I shouldn't, because it gets really whippy and can easily take out stops and stuff like that. So I avoid the open. If I said news, I meant the open. I don't trade the open. And there was also news at the open as well, which made it even more likely that it would be volatile. So I got out there. I suppose when you saw, if I was at the charts when this occurred, this block selling, then I could have got back in at 518 here and looked to hold to my target. But I'm done for the weekend. For the week and moving into the weekend. So yeah, the timing sales was used here. We had not a block buyer, but a fairly big buyer up here at these wicks, and then that's before the candles were wicks, and then they turned into candles with upper wicks, which meant that those big buyers were trapped. And you can see I drawn a little pennant there as well, so that was the reason for that, and it promptly fell off quite swiftly after that. The reason why I like going, I got a comment in one of my recent videos, the reason why I like, quote, fading moves as opposed to going with them is because panic and fear is greater than greed. So yes, people suffer from greed, but fear-based emotions such as panic and whatever else is fear-based will mean that the ensuing move will be much smoother than a move based off of greed. So it's easier to stay in moves if you can get in on the back of panic and fade panic, meaning trade in the direction of the panic and the opposite direction to the move that was played before the panic, if that makes any sense whatsoever. Then you're going to get smoother. You see here red bar, red bar, red bar, red bar, green. This is the only thing that may have taken you out, then red, little green, but it's still pointing down, upper wicks, it's just pumping down. Whereas if you've got trades that are based off of just sentiment and positive emotions, then they go back and forth, because again, bulls take the stairs, bears take the elevator or jump out the window, and that's only if we assume that the bearish side is the fearful side, and in this case it was. So that was that. And is there anything else to say? Yeah, that's the score. That now puts me pretty much back at the equity highs. So there are 2 days missing on this spreadsheet. Maybe I'll update that and give you a look at what it looks like now, but I'm somewhere up here now. So I'll just update that and then be back to close the video. Yeah, so there we have it. You saw what was there before, now we've added on these 2 winning days. So this is day 16, and we are about halfway, yeah, pretty much halfway through. Of course, you can draw down again. We all know how the market goes, but it's not a bad pace. I'm currently at that 32-day pace, as I was several days ago, a couple of weeks ago. I've bounded back and forth, and you know, I've been at a 20-day pace and then a 40-day pace. But this is pretty smooth, so I'll be looking to break this high most likely next week, if I continue with the sort of slow and steady approach. And it's nice to see the bounce off of the lower high, so that's not a bad result either. And just a second. Right, I can't remember what I was saying now before I got interrupted, but in any case, this is the result. 16 days, looks pretty good. 50 odd trades. Let's have a look at the stats. 51 trades, it's pretty much 750. There are the pips, expectancy 2.41, reward to risk 37.25% of the time, and longs seem to be disproportionately favorable for gains, but I know better than to listen to those stats. Stats are just after the fact entertainment more than anything else, because if you try and lean on one way or another, usually that results in disaster, and at least for me. And don't know what this is, why that's saying 38 minutes and 10 seconds. I think there may be a bug here. But in any case, average win, average loss. Or perhaps this is an hour and 42 minutes and this is 38 minutes. Meaning that I'm staying in my winners longer. And here's the days: 10 winning days, 6 losing days, and the percentages. And the average winning day is 1.29 times as big as the average losing day. So that's it. We've got the all those statistics there, and it's just do more of the same really and see. I think it's a case of when I cross the finish line rather than if I cross the finish line, but never say never. I'm just going to stick to my discipline, stick to my plan, and see where it takes me. So that's it for this review. Have a nice weekend if I don't do another video, although I may do another one before the weekend's out. And as always, follow your plan and stick to your rules. See you next time.